Good evening. This is Ken Long at Tortoise Capital with a look at a live chat room case study for symbol XIV from February 15th, 2017. And we're going to be examining the regression line crossover and Bollinger Band framework in some detail. Just as a point of reference, this is the daily chart looking at SPY just for a market classification, and we're looking at this last day here. So we've been in an uptrend with a series of strong directional moves after a long period of sideways quiet channel. We're getting some directional moves in the market, and so we're seeing strong large range days, and so this is an ideal time to be day trading because we're getting some directional indications and expanding ranges. And XIV is a volatility target, and that's correlated strongly with direction in equity markets. Although today what we'll see is the equities in SPY had a large up move, but XIV actually was net down for the day. But the point being is that we're getting strong intraday moves with longer trends and opportunities to trade. All right, so right from the opening, we're looking at XIV. We're on 1 minute charts. The market closed at 4 o'clock here yesterday and then opened up here. Notice that there was a strong move away from the VWAP at yesterday's close, and there was a continuation along with some intraday noise and then failure to follow through. So about 30 minutes in, about the time for the quick frog, we've got our 30-cent hybrid frog box noted here. We get the regression line crossover outside of the river. In this case, I'm treating yesterday's significant move in the last 30 minutes as the unambiguous move that we look for in the owl. So you notice this is not only a hybrid frog, this is also an owl move, kind of a classic owl. Unambiguous move, RLCO outside the river. The RL10 has crossed through the dragon. The 30 has rolled over. The slope of the dragon is down. This one breaks a dragon belly here, so this collapsing dragon. It all just comes together, and this is just screaming to be short here. To go back to yesterday's VWAP, which is down here, you notice it basically did that. And so we get short at 69.60 with an initial stop of 30 cents. Cover down here at 68.60, so that's a 3-hour move right from the open. There was notice the price had been riding the Z3 Bollinger Band line all the way down, got down as far as 68.30, and then started rocketing back up. And so in this case, to lock in that gain, we don't wait for that to get through the Bollinger, or the through the dragon, I should say. Then when that doesn't follow through back to the VWAP and starts to collapse again, we get short. It gives us a momentary excursion down here, but then starts to recover. The RL10 rolls up. It gives a higher low, and so we cash that one, and now we're playing. This would be a continuation or a pocket entry. So number one is a combination of hybrid frog and collapsing dragon. That's the pattern. 2 is a continuation on that hybrid frog and owl, and that scratched. And then pattern 3 is also an owl. So now we have the unambiguous move, RLCO outside the river, RL10 crosses the dragon, the 30 has rolled up, the dragon is sloping up, so we buy it here with the target to the VWAP and then the RL270. I want you to notice that, within 2 minutes we get the move that's almost there. The RL10 hasn't collapsed, still rising, and so at this location, now you have the nice problem to have of what to do with this trade as it starts to stall around 69. You're long from 68.60. You're 40 cents in hand. That's like a 0.7 R if you're using the full frog box for your position size, and you got a 0.6 or 0.7 win in hand after 2 minutes. So if you cash this somewhere in here upon this failure, I wouldn't be offended. But the main line of this thing is to follow the RL10. As long as it's going up, we're still in. The RL30 hasn't caught up to it yet. It hasn't threatened the dragon. The dragon is acting as a buffer to keep pushing this thing north. And so those are the three patterns that we have: a hybrid frog slash owl, an owl continuation, and then here we have an owl or a P1 RLCO entry. So now we're going to continue the same idea too as what I described with that long spiky move to the top near the VWAP. And then at 3, what we're looking at is, so 1 is the pocket entry for the owl. 2 is an excursion that almost gets to the VWAP. That might be a gift, and I wouldn't be offended if you took it. At 3, we have price rolling over, the RL10 rolling over, the baby dragon rolls over. We have an RLCO at 3 outside the river, and so if you're long from here, that's sort of a classic entry. At 4, we would have a pocket entry, which would be a continuation of this first move. So then we get a dead cat bounce, and so 4 is where you get short. 5 is the initial target. It's also the not later than entry to get short on a collapsing dragon. So 5 is a collapsing dragon, and you can get short anywhere between 4 and 5. I like 4 because it gives me a target at 5, and if it holds support at 5 like it did last time, then I can still cash a winning trade on the short side. And so I like to treat the resistance at the edge of the river or just short of the VWAP as an opportunity to get back in tune with the primary trend of the day, which looks to be down. 6 is a price swing low, and so if you didn't get short at 5, you could get short at 6. But really, I treat that really as it's a pseudo-conservative entry because you think like you're protecting yourself against the risk of it not failing, like you're worried about getting short at 4 and 5, and then it doesn't break down through 6 and often run, and off it goes running. But to me, there's opportunity from 4 to 5 and 5 to 6 that if you're short from 4, you can make some profits in here. So 6 is the swing low of actual price. Notice how the dragon belly gets you in a little bit sooner, and then we would certainly expect the price to collapse if it gets through 6. And then 7 is sort of the last place on this chart to get short, and that would be at the base of the RL30 reversal in here. So if you're short at 4, in my view, targets 5, 6, and 7, and then pick one of those 3 as an alternative entry, or even consider getting a second position short not later than 7. I like in this one getting a second position short at 5, and then managing this carefully just in case this really turns out to be a support level. In this pattern, I would be surprised if that was the case. So now this is that same number 1 is where we got short up in here. So that's the sell-off, rebound, rolling over, collapse, and getting short in that pocket. That is now this entry here. And now notice each of these little recoveries is failing short of the Bollinger Band mean. The river is still sloping down. The VWAP is coming down. The RL270 is coming down. The river is flowing down. So you get short at 1. At 2, I wouldn't be offended if you cashed. This is where we would have expected it to fail further because it got below the swing low intraday. And then when it doesn't, I don't mind if you cover in this area. So either take the gift or cover in this area would be fine. And you get to make bank on that. And then we're looking for an opportunity to get short again. So at 3, it finds the Bollinger Band mean and starts to fail. As it the RL10 comes through the dragon, you now have a perfect pocket entry at 3. It collapses down to 4. There's another gift opportunity where you could cash another 20 cents of open gain. I like to cover not later than 5. Now you have the RL10 crosses the baby dragon rolling up. Both of them cross the dragon, which is starting to bottom out. You can see the belly of the dragon starting to form. At 6, you have a choice. By this time, we're uh, we're stalking an owl. Notice the 30 hasn't rolled up yet, so this is not a pocket entry. I want you to notice that 7 was the belly of the dragon on this one. And so if you didn't get short of 3, you have to get short as it crosses through here for a collapsing dragon to capture this one. A rebound from here should find resistance around 0.7, so that what was once support is now resistance. So we're expecting this thing to fail right around this yellow dot vicinity, the Bollinger Band mean. So for me, the yellow is a place where I'm really wanting to stalk this thing short. There's been a nice move already from 69.80 down to 67.70, but there's still about 60 cents available in a range stat move. So this has not failed far enough yet. So 60 cents beyond 67.60. This thing could go to 67 even, and before it becomes a range stat move. So if you can get short at 68.20, there's $1.20 of downside profit available in it. This is this spike here is this spike here, and we talked about getting short in there. That's getting short here, and notice that the trend is still down. It took longer for it to fail the Bollinger Band mean, although it was steady failing. I'd be looking at cashing at 67.40. You've gotten most of a range stat move downward so far. You're several hours into the session. That looks like the morning move. If we get some support here, and it looks like we are with a couple PSAR dots, I like this. I like cashing here, and now I'm thinking about a potential getting ready to stalk another short if it fails as the Bollinger Band mean, or we've now got enough distance from the VWAP and the RL270 that in about 5 or 10 minutes there could be an owl entry that starts to play the rebound. And in fact, that's what we get. This is actually this move here terminated in this move around 11:45. Now, if you don't get this one, I'm not offended. There's an owl entry right around the Bollinger Band mean here, and now you're getting from 67.80 to 68.50, so a 70-cent move in here. And now you certainly have another owl opportunity. And I'm showing these two blocks as ways to think about these turning points in the dragon as critical states, that when the price is in the middle of that dragon and he's on the edge of the river, you have a critical state because you have a large move available to the downside if it fails out of the dragon, or a nice rebound back to the 270 if it gets through the dragon and becomes an owl. Notice in this case it actually did that. Then after that nice move all the way up to the VWAP, you have another critical state forming where you have price beginning, the volatility drying up. You're at the VWAP. You're at a place where the last time it got there, it rolled over and gave you a nice big fail, which was a nice trade as part of the larger trend of everything being down. And so we have two critical states identified, and that's in that yellow area is where you've got to be developing your directional bias and framing your trades. So taking that owl entry then, we get an RLCO exit, the RL crossing the dragon, RLXD. We get a pocket entry, and this is a perfect pocket. I want you to notice that we have the first counter trend move is put in with this owl, and it hits resistance where it hit resistance, so that's why we cash this. But now it comes back to the Bollinger Band mean, and then instead of failing back to the RL270 and the belly of the dragon, it finds support, and now the RL10 comes out of the dragon. So now we have a low and a higher low. If you look at the baby dragon, you have a low, a higher low, a higher low, and that makes this a perfect pocket entry with a stop at Z2. You get it gets through this resistance here, finds support. Again, this is another opportunity for it to have failed back down here, but it didn't. It took off. So I added that second position on a pocket entry, and now we get the RLCO outside the river. We have the 10 has rolled over, the 30 has rolled over. I cashed both positions here, and now I'm looking at an owl entry right here around 69 even. That owl entry, just like clockwork, leads us down here. If you cover here, which is fine because that's a pocket entry or an owl entry, so that makes this a nice exit. Then you can get short in this pocket again because now we've reestablished the downward trend because of the higher high in the dragon hump, a lower high in the dragon hump. So now when you get the RLXD in the pocket, you can get short. Now you think this leg should be as big as this leg for symmetry purposes. And it just about happens that way. I'm not offended if you take the gift or if you cash in here at the RL crossing the baby dragon or even in here. But then if you do, then you've got to get short back here in the pocket once more, and then there's a couple more gift opportunities available. Here's one. I just want to shift gears to a VXX case study from Charles, and he's made two just beautiful trades. Here's an owl entry, perfect cash into hesitation at the Bollinger Band mean. You'll notice from his markup he's identifying dragon humps and dragon bellies. The little white dots showing where the RL30 enters the river here, crosses the Bollinger Band mean, leaves the river, and then here he's got an owl entry, long, perfect cash on the gift at a place where the last three times it rolled over, so you don't need to wait much longer. Just grab it. A 0.9 win and a 0.7 win, perfectly executed. This is my markup. Looks a little messy, but what I want you to notice is first in the yellow circles, what I've done is I've drawn circles around where the three dot sequences where the RL30 was outside the river and then reverse it, entered the river, crossed the Bollinger Band mean, and departs the river. And then you get this upward price action. And then when it reverses the other way, you get white dot where the RL30 enters the river, crosses the Bollinger Band mean, departs the river, and this becomes a perfect collapsing dragon place to get short. Now, Charles was able to get long in here, so this yellow circle covering that three dot transition state from RL30 outside and failing to RL30 cross and now climbing, you get those three signals, and then you have a nice upward leg in this orange. And we see the same pattern over here. The three dots indicating the entry, the crossing, the departure, and then that's followed by a nice leg one of a move down. Here you get the 1, 2, 3 reversal. You get a nice leg up. So don't be surprised when you see a continuation of the change of direction getting that next leg up. If you think of this as one leg, that's the second leg, and then it rolled over. You'd like to see 3, you plan for 2. I would also just have you notice, take a look at these two dragon humps in the blue circle being so closely located. This is becoming strong resistance, and that's why I like this cash right here, because it's selling into well-known, well-established resistance. If it breaks out, we know how to re-enter and measure that. But the thing I would also just point out here on this one, on a downward, this downward move was screaming for a short here with those two high dragon humps, and then the collapse through the dragon belly. This price tells you that this support didn't hold, and so now you get a nice move. Your target would be back down here to the belly of the dragon, and didn't quite get that far. But now this one is the one I would ask you to take a look at to get short. Although I love this stop and reversal here. So there's another opportunity here that we can get. So that's everything I want to cover today. Thanks for hanging in there. Ken Long at Tortoise Capital. Keep your risk measured and your powder dry.